Hey folks, we're going to talk about the worksheet for bank reconciliations. So we're going to stay to the left of the blue line for now. The objective that we want is to have a true cash balance for the bank statement. So what we're going to have to do is compare what's recorded on the books to what is recorded at the bank, and then reconcile to make sure that both the books and the bank have the same true cash balance, because that's going to be what's on the balance sheet at the end of that particular period of time. So here's some information for the problem that we're going to work with, and the objective or the end result or the required or instructions, whatever you want to call it, is to determine the true cash balance as of November 30th. So the first thing we're going to do is we're going to get last month's bank reconciliation. So the October 31 bank rec, it shows cash balance per bank is $6,000, and they added a deposit in transit of $842. So just in case you don't know, a deposit in transit was a deposit that was made on October 31 after the bank closed its books. So the deposit was actually posted at the bank on November 1. So at the end of the bank statement for October 31, the bank does not have that 842 recorded. And it should, because it was actually at the bank on the 31st, so we're just going to add it back to the balance. Alright, the next adjustment in the October 31 bank reconciliation was for outstanding checks. So these are the checks that were written during October, and they're on the books in October, but they did not clear the bank in October. So the bank did not know that the company had written them yet as of October 31. So that $6,000 balance did not have the deposit in it, nor did it have these checks taken out. So we need to subtract the checks that we know about but the bank doesn't. And so that gives the adjusted true balance per bank at the end of October, and the balance per books agreed to that same amount. And that's a good thing, because that's the purpose of the reconciliation, is that both agree. So what we have now, we have the November bank statement that shows the checks that cleared and the deposits that cleared. And we have the books for November that show the checks that we wrote and the deposits that we made. So what we need to do is we need to compare the two. So let's look at the deposits in transit first. So here are the steps for reconciling a bank statement. In step 1, you compare the deposit in transit from last month's bank reconciliation. So October 31, we had the $842, I believe, with the deposits listed on the November bank statement. If the deposit cleared the bank, then there's no longer a deposit in transit, and it will not be on that November bank reconciliation. Okay, so let's do that. And it was $842, and the bank statement shows, I'll be darned, that $842 cleared the bank on November 1. Alright, so I am going to change the color as we go through it to show that we've taken care of it and that it cleared the bank. Alright, a second part of that step is compare the deposits made in November per the books with the deposits on the November bank statement. Any deposits on the books that are not on the bank statement are considered deposits in transit and should be added to the balance per bank. Okay. So can I get all this on one page? Maybe. So the November 3rd, we're looking at books, deposits per books. Yes, books. Okay, we have 666, and we have the same thing at the bank. The bank shows 545, and yes, we have that one. Actually, we should go the other way. So books show a deposit of $14.16 on November 12th. The bank has it on the very next day, $14.16. So that's good. Books show $8.10 on November 17th, and the 18th at the bank is the same thing. books show on the 20th $16.42, and the bank shows $16.24. Okay, so what I'm going to do is I'm going to copy it and just set that aside because that is a mistake, and we're going to have to figure out who made it and how we need to deal with it. So we'll think about it in a minute. Let's keep going. On the 24th, the books show a deposit of $14.12, and the bank has it on the next day, the 25th, same amount. That's good. Books show November 27th, $9.08, and the bank has it on the next day, the 28th, at $9.08. And the books have $6.52 on 11/29, and on 11/30 the bank has the same thing. So those did fine. So we have one error, and we have one deposit in transit. So I'm going to copy the deposit in transit, put it over here, and I'm going to label it DIT, and I can label this error and this one error. Alright, and that helps point those out. Okay, so let's keep going with what we're doing. Step 2 is to look at outstanding checks. So the first thing we're going to do is we're going to take any outstanding checks from the October 31 bank rec and compare them with the checks that were cleared in November on the bank statement. If the check cleared the bank, it is no longer outstanding and it will not be on that November bank reconciliation. Okay, so let's take a look and see what we've got. Alright, so we have first check number 3451 for $700. I could probably put a dollar sign in that column. $700, 3451. This is the bank statement. It doesn't look like it cleared the bank. So that one is still outstanding. So I'm going to copy it and I'm going to pull it over to there. Let's make it bigger. And I'm going to label it outstanding. Alright. Check number 3470 for $396 did clear the bank. So I will show that it's cleared. Check number 3471 for $464 looks like it cleared the bank, so I will make it pink. Check number 3472 did not clear the bank, so I'm going to add it over here in my outstanding check notations. 578 for number 3474 did clear the bank. So I'm going to show it that it cleared. Pink is what I'm wanting. Alright, so we took care of that piece. We still have two checks that are outstanding. And we're going to go back to the directions. We're on checks. Second item for checks. Compare the checks written in November per the books with the checks on the November bank statement. Any checks on the books that are not on the bank or have not cleared the bank are considered outstanding and should be subtracted from balance per bank. Alright, so let's continue on. So with the books, check number 3475 for $903 looks like it cleared the bank, so we can do that. Check number 3476 for $1556 cleared, and there. 330 cleared. 300, oops, didn't clear, did it? Okay, so that $300 is, let's see, I'm going to come right down here for those outstanding checks. And where did I do that? I did it actually one over, didn't I? Put it there and label it outstanding. Okay. So check 3479 for $890. 3479 cleared the bank for $980. So here's another error that we have. So let's see, I'm just going to take one at a time. So that one comes over here as an error, and this one comes over here as an error, and we'll deal with those errors in a bit. Alright, so the 300 was outstanding, the 890 is an error, 714 cleared the bank, same number, 3480, cleared the bank for the same amount, that's good. 382 cleared for 382, 350 did not clear, it's outstanding. So it goes right there. Okay. 317 cleared for 317. We have to go way down here. 495 cleared for 495. Okay, so the rest of these checks are outstanding. So we'll bring those over here. I'll bring these two over. I'm going to copy the outstanding piece so I know what I'm looking at, sort of. Okay, we'll leave that right there. Alright, so we have done the deposits in transit. We've done outstanding checks. And you know, we could probably go ahead and take care of these errors in the deposits and the checks, I think. Let's do the deposits first. So, I don't want to do it that way. Sorry. Let's just keep going down the list. Alright, so on the errors, the bank, we're going to make the assumption that the bank did not make any mistakes and that the company made 2 mistakes. Okay? There will be no error adjustments to the bank balance, but there will be 2 error adjustments to the books. Okay, on the first one, as you went through the deposits, we noticed that the deposit on 11/20 was on the books at $16.42, but it cleared the bank for $16.24. So if we make that assumption that the bank did not make a mistake, we can assume that $16.24 is good, and that we show too much money in the books. So what I need to do is subtract $18 from the books. Okay, if you need to listen to that again, stop, rewind, play it again. As we went through the checks, we noticed that check number 3479 was in the books written for $890, but it cleared the bank as $980. We made the assumption that the bank did not make a mistake, so the error is in the recording on the books, and the difference is $90. And because it cleared the bank at more than what we thought we wrote it for, we need to subtract that $90 from the books. Okay, so we'll get that done. And then we have bank memoranda. Obviously, my spacing here did not work so well in some kind of transition. So let me fix it so it looks good to me. Okay, the bank issued the memoranda, so the bank has already recorded them. Did you get that? Since the bank sent out the memo, it means that the bank knew about it, so they'd already recorded the 2 items. So we're going to be adjusting the books is what we're going to do. So the bank collected a note for us, and we're going to add the net amount of the note to the books. And the bank charged us a fee for printing checks, and it will be subtracted from the books, and we'll look at the details of it as we go through the bank reconciliation. Okay, so let's see. Here's the memoranda for the note collection. Here's for the fee for printing checks. And we have balance per books and balance per bank at November 30th. That's good. Okay, so now we're ready to move to the right side of the blue line, and we can go ahead and make our actual bank reconciliation. So on one side, let's see, let me put a nice little blue line in here if I can. On this side of this wider blue line, we have balance per books at November 30th, $59.58. On the right hand side, we have balance per bank November 30th at $9,100. So we took care of deposits in transit first. So we had one deposit in transit on November 30th, and it was for $25.41. So we are going to add that to the balance per bank. So I'll go ahead and put pink. Actually, I'm just going to leave it alone. And then we had a list of outstanding checks, and I simply copied over the check number, copied over the amounts, and the total outstanding checks are $34.50, and that's all we had. We had no errors or anything else to the bank. So the true cash balance that we're going to try to come to on our side of the books also is $81.91. Okay, so let's start on the book side. This is where we made some mistakes. So we have balance per books $59.58. And we have two errors that were made. The first one, the bank shows a deposit of $16.24. We had it on the books at $16.42. The bank was right. We were wrong. So we need to subtract. It's a deposit. Yes, we made the deposit for too much money, so I need to subtract from the books $18. Okay? All right. The next error is for the check. We wrote a check for what we thought was $8.90, but it cleared the bank for $9.80, so we really wrote it for $9.80. And we just recorded $8.90 as both of these are transposition errors. And if you'll notice, the differences are both, 18 and 90, are both divisible by 9. So that's what a transposition error is, always. You just transpose a couple of numbers, and the difference is always divisible by 9. Pretty interesting. So because the check was actually written for more than we showed, we need to subtract that difference of $90 from the books also. Okay, so now we have the bank memoranda. So they collected a note for us. And if I go in and read the actual details of that memoranda, which we have not done yet, right here, the bank statement told us that they had credited our account for $23.75 for the collection of a $2,300 note for this company, plus interest of $91 and less a collection fee of $16. And the company had not accrued any interest on the note at all. So that means we need to record the interest revenue, we're going to need to record the fee, and we're going to need to take the principal amount out of notes receivable. Okay, so let's go up here and kind of look at what we're going to do. We're going to collect the money, add the interest, subtract the fee, and a net of $23.75 is going to get added to the bank account. The second memoranda is for printing checks for $34. So the bank charged us or debited our account for $34 from the bank's perspective. And we're going to subtract that from our bank balance. And now, true cash balance for the books, $81.91, and I'll be darned. True cash balance for the bank, it's the same thing. Whew, I'm so glad that worked out. Okay, the next step is making journal entries. Now, do you think that the bank is going to actually let someone off the street like you or I go in and make an adjusting entry on their books? Probably not. So the only books we have control over are the company books. And you know, we can make journal entries on the company books, and we need to do that because we need to get the books from their current balance of $59.58 to their correct balance of $81.91. So I'm going to take each of these reconciling items and make a journal entry for it. I could do it all in one. I can do it in a separate one for each one. I can do a separate one for each individual item. Whatever you want to do. It doesn't matter as long as cash ends up at $81.91. Okay, so we're going to make a couple of assumptions. We're going to assume that any corrections to deposits are going to go to accounts receivable because that's probably where we got our money from, people paying their bills. And any corrections to checks is going to be made to accounts payable because we made a mistake when we paid our bills. Okay, so the first one, I'm going to take money out of cash for an error. So if it comes out of cash, it goes back into somebody's accounts receivable account. All right, then we wrote a check, so that's $90 coming out of cash. And the $90 is also coming out of accounts payable. To collect the note, I'm going to show cash for the $23.75. We're going to debit a bank service charge for the $16. I'm going to credit notes receivable for the principal of $2,300, and I'm going to record interest revenue as a credit for $91. And the final adjusting entry is to take the $34 out of cash with a credit to cash, and it represents fees for printing checks, so I'm going to debit bank service charge for $34. Okay, next step, we need to post it to our cash T account. Balance per books, $59.58. Post the $18 we made in our journal entry. Post the credit of $90. Post the debit of $23.75 and the credit of $34 and run a new balance. Guess what? The cash T account shows an ending balance of $81.91. Which is exactly what it should show because that is the true cash balance on the bank reconciliation for books and bank, and the balance sheet at the end of November is going to show cash of $81.91. And that's what we want, all three things to agree. Okay, good luck with your bank reconciliations. Talk to you later. Bye.